Monday, December 23rd, 2019, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about how the New York Fed, in my opinion, is holding trillions, if not hundreds of trillions, of off-balance sheet transactions or derivatives. Yes, they do have a balance sheet which shows they've got about 4.2 trillion in assets now, but this is completely different. This is what the banks that the Fed controls and oversees do. They hold, as we know, off-balance sheet derivatives. Some would say that there's more than 1,000 trillion of off-balance sheet derivatives out there, or more than a quadrillion. And I tend to agree with that. It was the BIS who regulates these derivatives and these banks internationally that made the change in the calculation of the notional amount in order to make it look like these banks had reformed and had less risk. And why do I think the New York Fed is doing this? Well, because they've done it in the past. They've done it for Bear Stearns, for AIG. They've done it for AIG Financial Products as well. And that's called the Maiden Lane LLCs. So what are these? Well, these are just offshore companies, or Delaware companies in this case, created out of the legal, entity of the New York Fed in order to siphon all these derivatives, to take them off the bad banks. In this case, it was Bear Stearns in 2008, AIG and AIG Financial Products. You can look it up on Wikipedia, Maiden Lane transactions. It says here, Maiden Lane was organized as a Delaware limited liability company on April 29th, 2008, and registered to do business as a foreign limited liability company in the state of New York on June 26, 2008. The registered agent of Maiden Lane LLC is the CT Corporation. And you see that they created Maiden Lane 3 LLC. I would venture to say that they're creating a lot of more of these LLCs to take a lot of rubbish from these banks, especially now when we're seeing all the trouble in the repo market. What is the other reason why I think the New York Fed is doing this? Well, because they've never allowed Congress to do an audit of the Federal Reserve. We know Ron Paul has tried, and other Congress people have tried, but there's never been an independent audit of the Federal Reserve. And that's probably why they're holding trillions or hundreds of trillions, maybe, in these derivatives off their balance sheet. So we can look at the balance sheet. I look at it every week, the Federal Reserve's balance sheet, but that's just the stuff in the balance sheet. It doesn't show anything else. And that's why a lot of people think they're bailing out the banks for trillions. Well, yes, they probably are. They're just taking these bad positions from the banks and putting it off balance sheet. Have these Maiden Lane companies or LLCs been wound down? Well, it doesn't say anything about that here. It just says that they closed their positions. I would venture to say that these Maiden Lane LLC are still around and that they can be used, or they can create new ones. So it's going to be very interesting this week to see what happens in the repo market. I spoke about this yesterday in my live stream. The guy who helped the Fed with all the repo situation back in the crisis of 2008, Zoltan Pozsar, who now works for Credit Suisse, he says the crisis isn't over and it could get even worse. He says he thinks the New York Fed is going to have to, or the Fed in general, of course, is going to have to start doing QE for longer term bonds. And with that, I'm going to look at where the markets are this morning. It's a little earlier. It's 7:17 a.m. London. We're starting to see gold break out of that falling wedge. Of course, this week, the trend line in the falling wedge is a little lower. We would have had to have been unchanged for it to be breaking out, but actually gold right now is up 6 at 1484.40. Right near the highs. The high's been 1485, low 1477. So gold is up about 0.4%. Silver continuing to outperform gold is up 0.8 at 1733, up about 14 cents. The Dow and the S&P and the NASDAQ 100 futures, they're continuing to go up. Looks like everything is melting up here in terms of the stock market. It looks like people are also trying to get rid of anything that is Federal Reserve note or AKA dollar. They feel that there's going to be no stopping to the money printing, no stopping to the fiscal largesse. We saw on December 20th, the Congress and the President signed into law another 738 National Defense Authorization budget, which was quite big, 738 billion just for defense. So that's not going to stop either, the fiscal part. And I see central bankers all around the world now pushing for governments to increase spending. Even the German Bundesbank President Weidmann has called for it, which is quite amazing in my opinion. So right now the Dow's up 22 at 28,477. S&P 500 is up 3.5, and the NASDAQ is up 11. Currencies are fairly quiet here. The fiat currencies, the pound is unchanged at just above 130. The euro up slightly at 111.83 versus the dollar. The dollar is down slightly against the yen at 109.40, and the dollar is unchanged against the yuan, or up slightly actually at 701. WTI crude is lower. We're at 60.15, down about a third. Brent as well is down about a third at 65.20. To finish off, let's look at the bond market. Bond yields are actually coming off slightly from a couple of trading days ago. We were at 192. Now with the Dow even higher, we're down almost 2 basis points this morning at 190. I think the market and investors are sensing that the Fed might start buying longer term treasuries, and that's why even though I think we should be above 2% now with what happened in the stock market late last week, it doesn't make sense that the 10-year yield is dropping here. So I think Zoltan Pozsar is right. I think the Fed is going to start doing QE for coupons, as they call it, or longer term paper. Right now, of course, they're doing 60 billion in T-bills, which they say is just a technical operation, even though their balance sheet is ballooning. I've looked at the numbers, as I've said. It's increased by 478 billion since August 29th, their balance sheet. In the last month, it's increased by 108 billion. So it keeps going, and we don't even know either, and we'll probably never know unless there's a big backlash against the Fed and people really crack down on the Fed and they demand an audit. We will never know how much of these trillions or hundreds of trillions, sometimes even thousands of trillions of over-the-counter derivatives they're holding for these too big to fail banks. And that's why we need to keep talking about the Federal Reserve because the Federal Reserve controls the money supply of the country. And as Mayor Amschel Rothschild once said, I care not who makes the laws as long as I control the money supply. And that's why I always say that, in my opinion, Politics is a diversion for these people, and that's why I try to focus as little as possible in politics and more on where the money is controlled from. It's the old saying of follow the money. So with that, I'm going to finish showing you my And the Fed mug, which you can get right now for a 20% discount if you use the promo code XMAS 2019, XMAS 2019, until the end of the year in my Teespring store, maneco 64 Teespring store. You get a 20% discount off and you get one of these and the Fed mug. With that, I'm going to say farewell. I hope you enjoyed the video. If you did, please hit the like button. Make sure you share this video far and wide. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, BitChute, DTube, and Steemit.